My name is Andrew Thake, and I'm from Minds and Money. Welcome to our last Minds and Money 5 at 5 show before the summer break, which today is sponsored by Aurcana Resources, Stuhini Exploration, and Canada Silver Cobalt Works, and is brought to you in association with the Resource Global Network. For those of you attending 5 at 5 for the first time, aim of 5 at 5, 5 guests at 5 p.m. is to maintain engagement and miners through a lively interactive format whilst we wait the return of physical events that we hope will be happening in Q4 of this year. If you have any announcements before we start, to submit questions, you can submit questions in the chat function, which is at the bottom of the screen, or you can also ask yourself to be unmuted and we can get you to ask your question live. We'll also be having some polling questions throughout the webinar where you can go and vote. Today's show focuses on silver. We've got a great lineup of guests. They are Kevin Drover, President and CEO of Aurcana Resources, Dave O'Brien, President and CEO of Stuhini Exploration, Matt Halliday, President, COO and VP Exploration of Canada Silver Cobalt Works, Jay Roberge, Partner Tehama Capital Corp, and Peter Krauth, Newsletter Editor of Silver Stock Investor. Now, hopefully, if you come up on your screen, we'll kick the ball rolling with a polling question about the price of silver, where you think the price of silver is going to be by the end of 2021. So whilst you're sort of voting, perhaps I can turn to one of our guests, Jay Roberge. Why silver? What attracts you to silver?
Well, thank you, Andrew. Great to be here on the 5 on 5 with Minds and Money. Silver has been, one of the more interesting elements in the market. The viewers here at Minds and Money may know me more for my interest in investments in battery metals. But obviously with the pandemic and the changes in monetary and fiscal policy, we've seen a change towards the precious metals. But it's a little bit deeper than that for me on silver. Not only are we seeing that monetary demand, but we're also seeing increasing industrial demand. And as you've interviewed Mr. Lundin in the past, he's quite well known for saying, when you see both monetary demand and industrial demand on the increase, you're going to see some appreciation in the silver price. And of course, we've realized that over the last year. The monetary demand really started to get attention in February when the Reddit crowd started talking about silver and silver squeeze. Which is, depleted inventories of available silver bullion to the retailers in the market. And then a lot of really interesting new industrial demand coming about. I'm well known for saying that, you can't build the new green economy and be anti-mining. And that certainly holds the case for silver with its demand increasing for solar and basically anything electronic. The whole world is moving to electronics and electrification, and silver is the #1 conduit of electricity. So we're seeing some exciting things. In fact, I was just reading Peter's newsletter the other day, and some really interesting numbers. Maybe this is a good segue over to Peter, perhaps, about the increasing demand in flexible and printable electronics. Moving up to something, Peter, 615 million over the next decade.
That's right, exactly. In fact, hi everyone, and thanks for having me here. The Silver Institute is forecasting that the current consumption of silver for printed and flexible electronics is about 48 million ounces a year, and they expect that to rise to, I think it's 74 million ounces per year by 2030. And so that, as you said, Jay, is going to absorb about 615 million ounces, which is about more than 60% of current annual supply, which is really quite big. It's impressive. And, we're seeing demands for silver on the industrial side. And like you said, on the monetary side, for sure, as the investment side as well. But it's impressive to see just how much the industrial demand has been growing. Solar panels take up 100 million ounces a year, which is 10% of all demand for silver. Mm-hmm. While thrifting has, in the last sort of decade or so, reduced the quantity of silver that goes into each panel, we expect that that's going to easily be overcome by installations. And so that the overall demand from the solar sector will continue to rise for silver. Automobiles,
sorry, and then just to interject,
no.
you've answered like Joe Austin's question in the chat box. How about the supply side of silver? Peter Bell's question is the supply side of silver broken like copper, or is it severely constrained on a going forward basis?
I think it's severely constrained. I'm not sure about broken, but getting some accurate numbers is often quite difficult. I can't help but say that even from the more established research groups, it just seems as though sometimes some of these numbers are good guesses, and then they're sort of plugged into fill gaps. It's unfortunate, but that seems to be the way it is. It's very difficult actually for certain aspects. If you think about recycling, for example, how do you get numbers like that? A lot of these companies are privately owned. You can't be certain of statistics in those cases, and so in my view, looking at statistics in supply and demand is useful, especially in terms of trend. When you see how numbers evolve over time in these categories, I think that's sort of the most helpful way to look at these kinds of numbers.
Sure. Question for like both of you, for both you, Peter and Jay. I don't know who wants to answer it first, but sort of like, can you give us a bit of an insight as to what type of silver companies are currently attracting you? I don't know if you want to go first, Peter, and then you chip in, Jay.
Okay, so I'm going to say three sort of higher level filters. My first one is kind of a standard management, quality of management that has prior successes. And especially on the exploration side, I like to be sure that they have access to really good resources when it comes to technical expertise, again, on the exploration side. After that, my other filter is in terms of percentage of silver. If it's a company that either is on the exploration side, has a deposit, or is working towards outlining a deposit, I like to see close to or 50% or more silver, because after all, that's why we're investing in this company. It's supposed to be silver, all about silver. So it's already difficult to find such good companies. And so, and if it's a production company producing silver, then I like to see close to or 50% and up in terms of silver revenues from production. And my third filter is jurisdiction. That tends to vary, change over time in terms of what are good places or acceptable places to invest. Yeah, I mean, there's some places that you probably don't want to be. That's always a personal choice in terms of risk tolerance. But I do use jurisdiction as a filter.
Mm-hmm. Jay, what are your filters? Sorry.
I mirror a lot of what Peter says. For me, on jurisdiction, I think number one is countries that you feel are facing potential nationalization. That's a big issue right now with everything that's been going on in terms of government spending and debt. But in the I'm actually a shareholder in Aurcana and in Stuhini, just a small shareholder. And I actually founded a part of a founding group that founded a silver company in Mexico called Pantera Silver. I like the exploration plays. I like Mexico. I think that, you're going to see really good traction in the silver space. I think that the price, we'll see what the poll says, but I think we're going to be between where we are today and $30 by the end of the year, and probably higher next year. And just as a sidebar, I wanted to add, because Peter, this might be interesting for you. One of the things that attracted me into silver is because my background in batteries and lithium-ion batteries. Samsung, obviously a big electric company, consumes a lot of silver, but they're working on solid state, which is the next generation of lithium-ion battery, which contains silver. So there's a lot of really interesting things on the demand side. I can't emphasize that enough, that people have to pay attention. With the one side,
I always thought that sort of like solid state was about like 10, 15 years away. Am I like wrong on that, Jay?
Yeah, for sure. And that's not necessarily because solid state's going to be available anytime sooner, as much as there's been billions of dollars invested in the current technology, the incumbent technology, and they're going to want to get their money out before they do any kind of transition into a new battery set. And it takes a long time to commercialize. But the fact is that the point I'm trying to emphasize is that there are 1,000 different industrial demands for silver, and new demand coming from new products and new technologies, on a regular basis. So it's a very exciting metal. It's essentially the only precious industrial metal that you're going to find out there.
If I could add a bit to the Samsung story, the silver carbon film that they're making, it's an anode product, and it's going to be 50% smaller than what we're currently using. So when you compare the capacity of these new batteries that Samsung is working on, and you're right, I think they're well ahead of the curve, and we will see this technology rolling out soon, most likely in cell phones and computer products first. But because of that high density and it being so much smaller, there will be that definite push into vehicles and into big battery storage units to be able to maximize range and things like that. We're talking a doubling of range with such a reduced size of a battery.
Yeah,
so I that kind of technology is something that we really it excites me. So
I noticed that Peter Bell had put up a question about how supply side is opaque and demand growth being opaque. I see that you're commenting on silver carbon film. If you don't mind, Andrew, I'd like to just sort of pull up a slide with a chart here, and let me just do that right away. Not only, as Jay was saying about industrial use, but when you come to supply of silver, one thing that I think many people are surprised to hear is that under 30% of the silver supply actually comes from primary silver mines. So that's I think it's 27 or 28%. And so here you have the chart that shows you how much silver comes from copper mines, so 25%, 15% from gold mines, and 31, almost 32% from lead zinc mines. So the implication is that even if silver prices rise because of demand from multiple sources, a lot of the miners of silver may not be that motivated necessarily to try even and produce more silver. It's a small portion of their revenues often. And so, and as it is, it's difficult to try and, crank up a mine. So as silver prices rise, it's difficult to react and try to produce more, even with some delay. So that may tend to actually exacerbate the price rise because they simply can't meet sort of higher demand. So silver supply being inelastic and demand growth may actually feed quite a bit on rising silver prices.
Thank you very much for that.
If I could make a comment, as an investor, it's difficult to find value silver producers. As our presentation from Richie at the Silvercrest recently, and that billions of dollars come from New York and high valuations, and you say we're only trading 150% of NPV5, and so I can buy gold producers at 10% of NPV5 and sitting at 100 million cash. And he goes, well, there's so few choices for silver producers. So I find them very expensive as investors. So we have to find these early stage companies with some good upside. But from a production point of view, it's very difficult to find value. And in the gold sector, you can find companies trading at 2 and 3 times cash flow and less than six multiples. But in the silver, it's just not possible. So it's just challenging for investors.
Thank you very much for that. I think what we're doing now, we'll definitely come back to some of these questions about the price of silver and demand supply for silver later on in the show. By the way, for the polling result, the most popular answer was between 27.5 and $30 per ounce for the price of silver by the end of the year. We're now going to move on to our first presentation, which is Aurcana Silver Corporation, which is a Vancouver-based company whose shares are listed for trading on the TSX Venture Exchange. Kevin Drover has more than 40 years of both domestic and international experience in operations, project development, management, and process reengineering, with both developing and producing companies. Kevin, we look forward to hearing an update about Aurcana.
Oh, thanks, Andrew. And good to be here, everyone. I'm not going to put up any slides. I'm just going to talk to where we are at the moment. And Aurcana, obviously, we're a silver company. And as Peter said, in terms of the percent of revenue, we're at 71% of our revenue. We're not in production yet, but we will be very shortly. We have two projects. We have one in Southwest Colorado, where I'm sitting right now. I moved down here in December of last year, simply because of all the trouble of trying to get across the border from, out of Vancouver and whatnot, trying to get back and forth. And I spent last summer half of it in quarantine kind of thing. So here I sit. So we have the flagship of the company here, the Revenue Virginius mine. We're almost in production. We're testing equipment as we speak right now. We will be in production right at the end of this month. We're developing stopes at the mine right now, and things are going very well. We're pretty much on schedule and under budget just a wee bit. We're a very high grade mine. The feasibility study said 37 ounces per ton. It's a narrow vein mine. The vein width is about a foot and a half. We just recently cross-cut into our main vein that we're going to be mining first, and our vein width is 2.5 feet. Our grade in that area was, we were forecasted at about 24 ounces and 1.4 feet, and we came in at 2.5 feet and 36 ounces per ton. And within that 36 ounces and the 2.5 feet, we had half a foot at 86 ounces per ton. So far, so good. Things are looking really well. So we're looking at first shipments of concentrates in the early part of August. We're looking at cash flow positive in September of this year. We do have a second project that sits in Texas. So both of our projects are in continental United States. Texas is a good place to do business, as is Southwest Colorado for that matter. The Shafter mine is in production recently, is 2013. It's fully permitted. It has a 1,500 ton a day mill. It's pure silver, so it's 100% silver. We have a new resource there. We're working right now on getting a new 43-101 out. We're going to do a small drill program this fall. It's really too hot in Texas right now to even try to do a drill program from our perspective. So we're going to wait till October, November. But we're looking to start a feasibility in early 2022. And of course, pending a positive outcome of that feasibility, which we believe, then we would be looking at putting it in production in the second half of 2022. So we're looking at two projects coming online here within the next year and a half kind of thing. We do have the capability here in Colorado at the revenue mine of increasing production organically, right? We're starting up at 270 tons a day. That gets us about 3.5 million ounces production per year at an all-in cost of around $12 an ounce on a silver equivalent basis. But our mill is designed for 550 tons a day. So we will, over the next year or so, start ratcheting our milling rate up from that 270. First step is going to be 400. Second step, we'll go to 500. That gets us to about 5.5 million ounces a year. With Shafter coming online, we'd be looking at 2.5 to 3 million ounces per year. So, kind of 2024, we're looking at being somewhere in that 8 to 9 million ounce range. But I think the takeaway from here today is that, we're imminently going into production, looking at cash flow positive in September. Our costs are about $12 an ounce on the silver equivalent. Thanks, Andrew.
Well, excellent. Well, opening up the floor to questions. Jay, you mentioned earlier that you were an investor in Aurcana. What questions do you have for Kevin?
Well, I don't necessarily have any questions because I understand the story well, but I do want to comment that I do like it because it is in the U.S. I think this theory plays out with most minerals, but we're seeing a rollback on globalization, in my opinion, and more focus to domestic supply chains. So, the closer that supply is to demand, the better. And that's one of the primary reasons why I like Aurcana, is it being in the US where there's a substantial demand.
Okay. Peter, Do you have any questions for Kevin?
I do. So Kevin, you mentioned early 2022 would be, we could expect a feasibility on Shafter. Is that correct?
Yeah, I think we'd started in early 2022. So, it's 3 to 4 months. So April,
Okay.
May, we should have a feasibility available.
Okay. Do you have some estimate you can give us of costs and the type of preparation that's required to bring Shafter into production?
Well, we do have the mill there. It's a 1,500 ton a day mill. We feel it's going to be too big for what we need. So this is an oxide deposit, so it's going to be a cyanidation process, which is already there, which is already permitted, and so on. The only thing, the mill that's there is quite large, so we would have to put in a smaller one, we think. The deposit is very flat lying. We think it would be room and pillar, so we anticipate the costs are going to be fairly low coming into this. There's already a shaft sunk. There's 5,000 feet of underground development that was done by Goldfields back in the day, kind of thing, and we have to rehab all of those things. Right now, the estimate we have is about $20 to $22 million of capex to bring this into production. But of course, we'll need to refine that, Peter, as we get through the feasibility. One of the reasons we want to do this drill program in the fall is that we feel we can expand our existing resource that we've got there on the fringes. But even more importantly, we want to do some additional drilling for metallurgical sample that we'd like to do. Historically, the tail grade at Shafter has been about 1.5 ounces per ton, but we think we can get that down, and that will be a considerable amount additional to the recovery of that ore body. So we're looking at doing some in-depth metallurgical studies on this thing.
Thank you.
There's a question in from Peter Bell. Economic studies for Aurcana in place?
Say again?
The economic studies for Aurcana, are they in place?
For the Revenue of Virginia's mine, there was a feasibility study done, of course, by SRK Engineering. So that's and at the Shafter mine, there was a preliminary economic assessment done by MDA Engineering out of Reno. But of course, we're not going to start up with a PEA. We want to do a feasibility, so we'll have that done by a reputable company.
Okay. And just one last question. You mentioned earlier on about the narrow vein mining. Can you just specifically talk about your management or your technical team's sort of experience in terms of narrow vein mining?
Yeah, we've got a fantastic technical team here with a lot of experience in narrow vein mining. I've certainly got my share over the years between, here, Mexico, Chile, Nicaragua, Peru, and other places around the world. But the guys that we do have here, we got some of the best miners in the world. Brian Briggs, 6th generation miner from here. He's our COO of Aurcana, and he's got a tremendous amount of experience in this region of the San Juan Mountains, which was virtually all narrow vein mining. Mike Lee is with us. He was our general manager. He's gone back into retirement, but he's still here with us doing some work, training some of the younger guys. We got Matt Juth, who again is from this neck of the woods, a miner and a mining engineer. So we've got some really good folks here. We've had to pay substantial, bonus programs, and we had to up our game in order to be able to attract top-notch miners. But we've been able to do that, and that's been a really big deal for us in being able to acquire them and retain them.
Excellent. Thank you very much for that. So let's move on to our next update, and I'm just going to invite him just to go and share his screens while I give you a little bit about his background. Dave O'Brien is co-founder, president, and director of Stuhini. He's been in the role since July 2017. Stuhini have benefited from a recent upward price movement in the price of molybdenum, and are presently changing its focus on its Ruby Creek project from early stage greenfields gold and silver exploration to advancement of the world-class Ruby Creek molybdenum deposit located within the tenures. So, Dave, if you're able to share the screen, we're really interested to have an update of what you and the Stuhini team are doing.
Thanks very much for having me, Andrew. It's an honor to be here, a part of this Minds and Money. It's my first time here. Yes, Stuhini is a small little company. We completed our IPO in May 2019, and currently we try and use financial discipline. We have 20.06 million shares outstanding. We've done 3 financings since our IPO. We've issued no warrants and paid no finder's fees, and we've been blessed. Mr. Sprott's been all of our financings. Between company co-founder Barry Hanslet, myself, and Eric Sprott, we have a little over 37% of the company. Insiders have about 43. I'm not a serial mining executive. I'm an investor like most people here. Last year I did over 20 private placements. I'm a Main Street businessman. I'm successful on Main Street, and I've made a living being a venture capitalist specialized in the mining sector, and had the opportunity to partner with Barry Hanslet, the co-founder of Stuhini, who invented the A5 drill rig. He's a very successful prospector. He gets incredible deal flow on his desk, and if the two of them could build a company properly, we've got skin in the game. My salary is ridiculously low, and I do well if the shares do well. There's no booze tab, there's no restaurants and meals. The money goes into the ground, and in a case like this has to go into marketing as well. That's a challenging part, being fairly new to the sector. Our signature asset is the Ruby Creek project. It's big, it's vast, it's 27,000 hectares. Vancouver is a little over 11,000 hectares, to give people an idea. The Ruby Creek hosts the historic molybdenum deposit right in here. There's the outline of the pit right there. And last year we had some fantastic silver results. There's been really no modern exploration on the tenures for gold and silver. Homestake did a bit of area in the Ruffner silver mines, has this area too. We identified Ruffner, Adira Corridor, and Silver Surprise. Our best sample is over 14,000 gram at Adira Surprise. We identified 170 meters of strike. I have less than probably eight man hours there last year because again, it was the end of the season. The assays came back. We're quite startled. We also identified a 7.5 long kilometer corridor called the Adira Corridor with high grade silver showings all along it. These are polymetallic, sort of galena type veins. My best samples were over 5,000, 4,900, but some of these samples had up to 60% lead in them as well. They're quite interesting. And when they're drilling the Molly pit, they encountered on the edge of the pit, one of the drill holes, 8408 at 24 meters of 85 gram. But it's also, we're in the heart of the Atlan Gold Camp. There's the largest placer camp in Canada right now is within our tenures. And so there's a lot of gold prospect at these lower elevations. At the beginning and end of the season, we concentrate on the gold. And this is about 4,000 foot level where the proposed molybdenum pit is and the Adira Corridor is. Taking a little closer look at the corridor itself, this is a 7.5 long mineralized corridor. There's the historic Molly pit sort of right in there. And it's quite interesting. And this is the resource right here. Now, a year ago, molybdenum was $8 a pound. I looked yesterday, it was over $18, $18.64 a pound. And we have a 407 million pounds measured and indicated and inferred on top of that. We haven't verified the resource. It was done in 2009 by Golder and Associates, and we're looking to update it now. There'll be more news as that comes along, but our property does host this fairly large, we believe it's best in class molybdenum resource. It's road accessible. You can drive a Honda Civic to the mine site, and there's a Mines Act permit in place. So we believe we're ready to go. And ADNAC molybdenum at one point, back in, I spoke to the former chairman, Larry Rea, had a market cap pushing $300 million, did an $800 million credit facility, and it was under construction. When it went into bankruptcy, they had a scoop on site. They built a bunch of buildings, and my partner actually got the reclamation work to tear it down. And him and his wife were quite intrigued. His wife Janet Mills, a geologist. Not just the molybdenum, the gold, the silver, and the tungsten, the batholith that came in there, and how underexplored it is. And it's also, we believe, it's a best-in-class deposit. Now, again, it's a historical resource. You can Google it and find it by Ruby Creek Molybdenum Resource by Golder Associates. It's historical not because it isn't up to 43101 technical standards. It's historical simply because it's stale. And that's why we want to update the resource. There's a picture from the bulk sample, the chunky nature of the molybdenum. It's quite interesting. And if you use the historical resource and you multiply the current price of molybdenum, there's an in situ value of, again, it's historical, I don't verify, but in excess of $10 billion, which is why we're a little company with a $10 million market cap. And we have to do a major segue from exploring for gold and silver to developing molybdenum. To this day, we're reaching out to Chinese and steel companies and looking at possibly strategic alternatives. And we're still up there. All my teams are up there right now. I'm really proud of my team. You're in business, you're only as good as your team. I've got an amazing in-house technical team. And it's exciting. We're early stage in the gold and silver. We've also got some other fantastic projects, but obviously we have to strike while the iron's hot. And we had no idea molybdenum was going to suddenly, like when I booked this show, for example, 3 or 4 months ago, I had no idea I'd be talking about molybdenum, but we have to act, and we're excited about it. We're quite well advanced on a resource update. And again, ADNAC was trying to rush it into production. 2008 came along, the price of moly collapsed. A lot of their money was tied up in asset-backed commercial paper. They had an $800 million credit facility. They'd drawn $80 million onto it when 2008 came along and things went south. So, my job is identify assets and create value down the road. And we figure we can just keep this company alive. And one day this would become a valuable asset. And hopefully that one day is now. So there you have it. Thanks so much. And I look forward to any questions.
Yeah, sure. Well, let's throw it open to questions. I mean, perhaps I can bring in Peter first from Silver Stock Investor. What questions do you have for Dave?
So yeah, Dave, what I'd like to ask you is who is Ruby Creek being optioned from, and what kind of historical work has it seen?
Yeah, we optioned my partner Barry Hanslet, the co-founder of the company, had Ruby Creek, and it was never planned that Stuhini would get it. We just came out of the gates and got listed, and it was so happened that he sort of had it sold privately, and that sort of fell apart. And then, 2 or 3 other interested parties, and we optioned it from him. We optioned it from him for a total of $2.5 million in cash and shares over 4 years, a very generous sort of back-end loaded program. We've already issued him a little over 2 million shares, which is why he's such a large shareholder. The options for 100% of the project, subject to a 1% royalty. Again, we haven't done much work on the moly because there's been, 69,000 meters of holes, 339 holes, and most of the work on the moly was not multi-element tested. They merely tested for molybdenum, going back to 1969 to AMAX moly and Mandible Mining. For a large company, spent a lot of time, but very little exploration work has been done on gold and silver. And we've done 2 SkyTem surveys last year and this year, and followed up with our technical teams. We're really excited about the gold and silver prospectivity of the tenors. Again, it's just that the markets, we have to be reactive. My job is to be reactive and create value for my shareholders. And we do believe that if you look at competing assets, that they're either not permitted or they're too remote, they're not road accessible. And also we have very low strip ratio. It is open pit. It's a big porphyry, and it's open in 3 directions to depth. But again, we're just now going to start spending a bit of money on the moly. And we've been concentrating on gold and silver, and developing other assets as well.
What's your drill budget for this year, and how many meters, and when do you plan to start?
Yes, we originally planned a fall drill program, but I'll be honest with you, I've talked to a lot of my big shareholders, and they're much more interested in us sort of, does it really matter if we hit a couple of meters of 2,000 gram silver? So we're actually, if we do any drilling this year, it will be for molybdenum, just to sort of step out and show the world how high grade and what a quality deposit it is. The last holes drilled by ADNAC, we're not part of the proposed pit, and they're the highest grade. So these are internal discussions right now, and we might not even do a drill program this year. Again, we don't need much money. We only need about $700,000. We're raising 2.3 million right now, and it puts us in a strong position. And again, we're having those internal discussions right now, because we're going to be drilling. Everyone in northern BC has a delay this year. We normally would get up to the moly pit in late May, and this year we didn't get up there till the end of, and just recently, and it's been so wet, it's so much snow. The Golden Triangle, similar problems. So again, I think we're doing a major change of focus from drilling this fall. We're going to have a large drill program next year. Probably a 40-hole program, because we don't want to take chances. We have to geophysics or geology. Like a lot of these silver structures we found, we've lit them up with regional geophysics. We've identified them. Now we're doing IP geophysics. We have an excavator on site. We're doing trenching. There's 20 skarns in one area of our project. It's a very interesting project, but it's large, and we need help. We want to bring in a senior partner, and we're sort of trying to tailor our company that way and build it properly, and keep our structure really financial discipline. We'll be drilling our Q project too, probably early next year, and we've got a new nickel project now. There'll be more projects coming along. We pay next to nothing for our projects, and we buy them when they're out of favor. We get them for staking, or $20,000 to $50,000 off a prospector. We're very disciplined. We have access to flow.
Jay, let's bring in Jay. What kind of questions do you have for Dave?
Yeah, just to follow on with Peter. So out of the 2.3 million that you're raising, Dave, can you just sort of break that down for us in a little more detail?
Yeah, we're issuing 2 million hard dollar shares at 50 cents per share for $1 million, and we're issuing 2 million flow through shares at 65 cents per share, BC flow through for 2.3 million. for probably 1.3. That's a total of 2.3 million. And again, all the work we're doing this year is pretty much on Ruby Creek, which is eligible for BC flow through. Our Q project in the Yukon last year, we spent a lot of money on the airborne, so we're good till 2026 there. Yeah, but that's sort of how we're doing things. Again, we're in a little bit of a major segue, a major sort of transformation of our company. So again, this is a bit awkward, and I apologize for sort of changing the focus from silver to moly. It's just what I'm up against and what's happened in the last 3 or 4 months, and we have to be reactive. And again, I know all the moly stocks soared back in 2003 to 6, and we believe we don't need we have what the goods, and speaks for itself. And yeah, the budget is open for next year. Like a lot of it, obviously, if we possibly review the bankable feasibility study done by Wardrop Engineering, we've already had engineers look at that and make recommendations and changes. So there's a lot of things on the table as we do a major segue here.
Well, I mean, I think I can speak for sort of Minds and Money that we don't have nearly enough Molly stories at sort of Minds and Money. So we're really delighted to have that update from you today, Dave. And hopefully we'll go and come back to you, obviously, like later on in the show. So thank you very much for that.
Thank you.
Thank you. I'd now like to move on to our next update. And whilst he's just getting his slides up on the screen, I'm just going to go and ask him to unmute himself. I'll just introduce him. He is Matt Halliday. Matt Halliday graduated from Dalhousie University in 2007. He majored in earth sciences. He then spent the next 13 years in exploration as a resource geologist with Kirkland Lake Gold, First Cobalt, and SGS Geostat. Matt is a member of the PGO, is a qualified person for exploration and resource development, passionate about opportunities in the Cobalt camp, and is focused on developing world-class projects in the silver and battery metal space. Matt, we're delighted to hear from you today.
Thank you very much. So I'll just jump right into Canada Silver Cobalt. We're in Northern Ontario, in the town of Galganda. Is part of the historic Cobalt camp. The historic Cobalt camp is a camp that was a high-grade, narrow-vein silver mining camp, started in 1903. It's known for its extreme high grade. So in the early days, they mined the first 4 years at 2,800 ounce per ton. And there were people chopping the silver off the wall with fire axes. So this is a town that went through a crazy boom with all the shenanigans that came along with it. But, it was the birthplace of stock market silver here in Canada and potentially North America. There was a stock market right here. And it continued to boom for the next 80 years. And then in the 80s, the camp kind of dwindled down a bit. So we have the past producing Castle Mine property and our flagship zone, the Robinson Zone. The Castle was one of the last producing mines from Agnico Eagle, and it was a high-grade silver mine. And our new property, which is here located kind of along the Cadillac Larder Fault and the Rideout Shear Zone in Northern Ontario at the edge of the Cobalt embayment. We hit our discovery zone by hitting 70,000 grams per ton silver over 0.3 meters. So once we hit this, we had to go back and follow up on it. And so we went back and we did a series of wedge holes and some surface holes to define our very first resource. So the company is the very first company to put on a 43-101 compliant resource in the Cobalt camp. And our resource was small, but of sufficiently high grade that we think it is the highest grade resource in the world. So we have 7.5 million ounces of silver at 250 ounce per ton, or 8,582 grams per ton silver. And so following up on this resource that we released last May, it was May 28th, then we initiated a 50,000 meter drill program to continue to define this type of deposit. So it's a structurally hosted narrow vein type of deposit. And if anyone is curious to what these types of numbers look like, here is an example. So on this one, this is from our current drilling that we finished, or we started drilled in December. So this beautiful dendritic silver is actually 89,000 grams per ton over 0.3 meters. I wanted people to understand what this means in terms of value in the ground. So I did a gold equivalent, which I normally wouldn't do, but it's a 38.98 ounce per ton gold equivalent, based on whichever day I calculated this. I think it was in April. And these types of veins are what we call classical cobalt style mineralization. This is what they mined in the past. So I have a vein here, 5 to 7 centimeters true width, with extremely high grade, beautiful dendritic silver. There is cobalt associated with this, cobalt rimming, as well as silver rosettes with cobalt. And the cobalt is in the percent range. It's probably, in this particular vein, which I call big silver, we seem to get cobalt between 1 and 2.5%. This is basically something that we will progress into our next resource update. So I'm hoping to do a resource update for next year. And I would like to expand it significantly. I'm hoping to quadruple the current resource and continue to drill. And eventually I want to get down with a ramp and start extracting the silver. And so we've taken a lot of the steps to be proactive now. We're halfway into our environmental baseline study. We initiated the initial studies in October, and the full studies commenced in February. And we're working on the scope of work and design to tender out the ramp development. We have, as a vertically integrated company, we have a lot of things on the way that will allow us to achieve these goals, such as a laboratory that has a ball mill and a grinding circuit and a bullion furnace, so we can high grade almost immediately. And we also have technology within the company that can remove the cobalt and produce a cobalt sulfate for the EV market. So we're quite ready for that.
Are you now open for questions, or are there any more slides, Matt?
No, that's everything.
That's everything. Okay, great. That's great, because we've got quite a few questions sent in. So we'll go to Robert Schaefer first. How deep do you encounter the Nipissing Diabase? Will you try going beneath it?
So yes, the Nipissing Diabase here, where we have the Robinson, is about 400 meters deep, or actually it's a little bit shallower than that. It's about 350 meters deep. Our main zone is around 400 meters deep. And yes, we will continue to explore beneath the Diabase. This is not strata bound, so we can find silver above or below the Nipissing Diabase. It's just the unit that we've found predominantly the silver. So, but there is silver in the Archean above. And if we look at the genetic model, the town of Cobalt mined from the Archean volcanics, the Huronian sediments, and the Nipissing Diabase. So we're not bound to that. There's definitely gold potential above and below the Diabase as well. So there is definitely good reason to continue to explore above and below. We've certainly seen sniffs of silver above the Diabase, which is great news for us. So, there's a lot of potential there that these veins can go shallower.
Okay. A question from Lorenzo Quince. Is the cobalt equivalent in terms of ounces or troy ounces?
Oh, the cobalt equivalent. I didn't do a cobalt equivalent. I did a gold equivalent, and it would have been a troy ounce per short ton.
Okay, thank you for that. Maybe I can go to Jay. Do you have any questions for Matt?
Yeah, this is a really interesting part of the world for silver and cobalt. Over the years, the old guys, I think one of the common misconceptions is that the old timers mined out all the silver, forgot about the cobalt, and it's a cobalt camp. And that was sort of the story when the battery metals became heated. But it's obvious, Matt, that you have a good silver deposit here. But how does the silver or how does the cobalt sit in relation to the silver?
Okay, well, you're right. I think that when the cobalt boom came in here, people thought that this was a cobalt camp. And in some parts, they could be right. I'm sure there are donations where there is richer cobalt, and people can target that in the future. I wouldn't mind targeting that in the future myself. But this is a high-grade silver camp, and with 500 million ounces already pulled out of the ground, yeah, I'm willing to bet there's a few more billion ounces left in the ground that they missed. How does it? How does the cobalt and the silver equate? Well, there's actually a profile based on the vertical extent of the silver veins. And so on the near surface of this vein, it's idealized. You don't find it in reality at any particular locality, but there's a nickel arsenic level where you would have nickeline as well as some cobalt. And then as you kind of move beyond that, you get out of the economics and you would find iron arsenides and iron arsenides alone. And then you move down into more of a cobalt rich phase that might still contain nickel and maybe have some iron arsenide. And then you have the silver and the silver cobalt. And the silver is still native silver, so it's not intertwined chemically with the cobalt. The cobalt comes in the form of a cobalt arsenide. Either scutterudite, cobaltite, or some other obscure mineral that's not one of those two, but that's the predominant two is cobaltite and scutterudite. So in the terms of processing, it actually is quite good that you could be able to produce a high silver con because you have all this free native silver, and then you can produce a cobalt silver con that would have low grade silver and high grade cobalt. So, but they are within the same vein, and they are spatially related in that terms.
Thank you.
Peter, what questions do you have for Matt?
Yeah, hi Matt. I'd like to ask, what is the mineralization like at Castle and Castle East?
Well, the mineralization again is just these solid kind of plugs of cobalt and silver in a broader narrow vein carbonate vein system. What we see at the Castle is quite similar to what we see at the Robinson East. So what they mined at the Castle is similar, maybe not exactly identical, because there is zonation within these deposits. So even from the Robinson vein, our first one, to the big silver vein, which will be one of our newer vein systems, I noticed that the big silver is more dendritic. It's more, it's better silver. It seems there's less of the arsenide hosting the rock. So there is a bit of difference in form, but in terms of grade and chemical composition, I mean, it's all along the same spectrum. And so, and I think that the widths that we're getting is very similar to the widths that they would have had at the Castle, and some of that in the old days. And in terms of, say, like dilution and stuff, this mineralization is so sufficiently high grade that there's very little impact on that. But we do have what we call silver leaf, or not silver leaf, but we have these like little silver hairline fractures that penetrate the wall rock. And they go 1 to 2 meters into the wall rock too. So the mineralization actually goes into the wall rock. But other than that, the wall rock is pretty much, is pretty clean. So it's the fracture fills that have the silver and the big veins that have the silver. But the wall rock itself is pretty clean. It doesn't have a lot of extras in there. We do have other minerals associated. We have gold. We have a cobalt vein with gold in it. We do have copper, nickel, and zinc that come into the system as well, in both arsenide and sulfide form. But I think that the big three is the silver, gold, well, big four is the nickel, the cobalt, and the silver, as well as a little bit of gold here and there. Did I answer your question properly? I know you.
Yeah, you did.
Okay.
Thank you. Thank you.
There's a question posted from Peter Bella. I'll just read it out. Historical production simplifies the conversation about metallurgy. Any plans to do small work before the underground development? Bench scale testing for gravity to make a concentrate versus making final product silver doré, cobalt sulfate.
I'm sure that we have done other metallurgical tests in the past already, and we've taken some of our rock from the castle and have put it through our Re2Ox process at SGS Lakefield, and mostly the Re2Ox process is for recovering the cobalt, but in the same time we do take the results for the silver. But yes, of course, and our CEO, Frank Bassa, is a metallurgist by training, and he was one of the first metallurgical engineers at the mill in Cobalt when Agnico was operating in Cobalt. He has extensive experience in the metallurgy of this camp, and he was part of that team that helped Agnico extract the silver, recover the gold, and as well as produce cobalt carbonate for cattle feed. So he's well versed in the metallurgy of this camp.
Excellent. And then just just as a final question for you, and then it's exactly the same question for the other panelists. I'll probably ask Dave a slightly different question, but I'm just curious as we started off with a polling question as to where you think the price of silver will be by the end of 2021. What are your thoughts, Matt?
Where the silver price will be at the end of 2021?
Mm-hmm.
Well, I am not, I wish I could rub my silver ball here. But, one of the things that I've been watching is definitely how the silver to gold ratio is so extended right now. I don't know if it's 120 or 125 to 1, but I think that in the long term we're going to see that compress, and maybe by the end of the year it might not get down to a long-term average, but I think that we're going to see I think you'll see $40 silver by the end of the year personally, and I will be willing to bet in the next 3 to 4 years we'll see that ratio compressed to 60 to 1 or something closer to a long-term average.
Mm-hmm. Same question to Jay, but also the follow-up question is do you believe in this the silver gold ratio and investment thesis?
Yeah, I think it will compress and it will come to historical averages, much like Matt said.
Yeah.
I'm sort of in the camp, maybe in the 30 to 35 by the end of the year.
Mm-hmm.
But there's no shortage of other experts that, of course, will call much higher prices. So there's this, a big impact of what we really got to watch too, which we haven't commented on earlier, is the US dollar. So some theory would, of course, because of the fiscal and monetary policy would say that there's a decline in the dollar coming, but relative to what other currency, right? So we've seen some strengthening in the dollar recently, which might have had an impact on silver and gold. But I think, we're going to see a major correction in the markets in the United States. If you look at the biggest whales in the market right now, which was an article that came out the other day, of course, is the Fed, the Euro central banks, and the Bank of Japan, right? And we're heading for a big correction. I think that brings a lot of light and reality to the market, and I think that it'll bring an attention back to precious metals and mining in general, because of the expenditures that are going into infrastructure and the green economy.
Mm-hmm. Kevin from Aurcana, where do you think the price of silver is heading by the end of the year?
Well, I'm in Jay's camp here, that 30 to 35. I think there's a lot of forces out there as the price of the precious metals go up. There's seems to be always something, whether it's the US dollar or whatever, to try and limit that increase. But I'm certainly of the opinion that given the drive for renewables now, with the US back in the Paris Accords, mining is going to be a very big part of that green future. I think there's no doubt about that, and silver is certainly going to have the wind at its back, so to speak, in that regard. So yeah, that's pretty much where I am right now. I think it's got a bright future here.
And Peter?
Yeah, so my I guess forecast is a little bit higher. I think we could see as much as 37 by the end of the year. If I can share my screen again for a quick second. Here we go. Yeah, so the right now the ratio is in the high 60s, I believe. We've dropped considerably from March of last year. The average over the last sort of decade or and a half has been about 55. I think we're certainly heading towards that. And if you look at, if you take an easy number, round number, $2,000 gold at a 55 ratio, that would imply a $37 silver, which is over 30% higher from where we are right now. And ultimately, I think, like Jay and Kevin, that and Matt, that it's the ratio is going much lower, over the next several years. And I think silver is going to take out its long time, its historical highs, and actually go considerably higher than that. So I think it's certainly an exciting sector to be involved in.
What's the highest price silver has been over the last 10 years?
Last 10 years, well, that would just a little bit outside of 10 years would be April of 2011, when it hit $50-ish. So we're half that level right now. Gold is maybe 10-ish% below its all-time high. Silver is 50% below its all-time high. It's got a lot of room to make up, and I think all the elements are there for it to push its way through $50 and considerably higher.
Sure. And a slightly different question for Dave O'Brien. I mean, you can obviously comment about where you think the price of silver is going, but I'm probably as interested about where you think the price of moly is going, because it seems that you made a fantastic discovery, and obviously just kind of keen to see what you think the upside there is.
We don't know why the price of moly's moved. I'm told it's Chinese. I have no idea. Moly's just following other commodities. It's, think of the build out of the economy. I'm told that there's more molybdenum in a lot of structures. Also, again, we don't want to be a promotional company, but if you Google molybdenum disulfide and battery technology, they say it's going to revolutionize battery and 3 times more effective. But that could be 10 years out. We don't want to count on something like that. But as for my dollars as an investor goes, I'm heavily involved in silver and gold. And I just like to say that the US dollar is not in intensive care, it's in palliative care. And we're not like for drunken sailor-like printing of money by all central banks around the world. Massive annual budget deficits and ballooning debts and artificially low rates. Where would we be? I just ask people, if rates were normal right now, we'd have maybe 5% interest rates, which means the Royal Bank could borrow at 5.75, which means the best 5-year mortgage would be 6.25. We wouldn't have a housing bubble, we wouldn't have a stock bubble. This is all artificial. And I own some physical. I'm actually buying a lot more physical silver and buying gold companies, again, with a value proposition. And again, I didn't plan on being a molybdenum developer. We just felt that we could keep this company alive and have fun exploring. And suddenly, Moly woke up. But I'm not an expert on molybdenum. We're doing lots of research on it, looking into it. It trades on the LME under Platts. It's hard to get a lot of information about paying money. But it's a growing demand for moly, and the best solution to low resource prices is low resource prices, and no one was allowed to bring any molybdenum projects into production for many years, and suddenly you can't just snap your fingers and get supply. So again, I don't know what the future holds.
Well, look, thank you very much,
Andrew. Andrew, if I may. Oh, sorry. I was just going to add in that the other thing to keep in mind where gold and silver prices are today. People are making, the producers are making money at this level. There's a good margin there. These companies are free cash flow and making money at 27 silver and gold at, let's say it's 1775, 1800. If things like everybody says here move those prices up, your investments in this space are going to do well.
And I think on that positive note, many thanks to our guests, Peter Krauth and Jay Roberge, Kevin Drover, Matt Halliday, and Dave O'Brien. Many thanks to our sponsors, Canada Cobalt Silverworks, Stuhini Exploration, and Aurcana Resources. Also, thank you to our media partner, the Resource Global Network. I said this is our last 5 at 5 until the 19th of August, where we're now going to take a summer break. So see you then, and until then, stay safe. Thank you very much.
Thank you.
Thanks, everyone.